Upstream, are you with me? Under rainbow, curtain in the city, rushing through me. Downpour, upstream, are you with me? Feeling
Good afternoon, everyone. BC Ridgefield here, coming to you live from London. It has gone 9 minutes past midday now, meaning we are effing 9 minutes late for the stream. Deep apologies. We did have some technical issues this morning that were a little bit out of our control, but thankfully the legends at the Bird Nest have stepped in and we are with you. Apologies if you have been waiting. Hopefully it will be worth the wait. As always, really big shout out to all of you that have tuned in to watch this live. We've been getting between 4,000 or 5,000 of you most shows at the moment, as well as sometimes double that watching that on recording, which, you know, is always a massive blessing for me. You know, as these market conditions continue, as they continue to catch a lot of people offside as well, please don't forget that you've still got plenty of time to sign up. We've opened the entire paid Discord for the entire month, all right? So right through until the end of March. Excuse me. So CryptoBerg, all you have to do is go to his profile. You can see it on the screen at the moment. Just go through, sign up, and then you can just get access. You don't need to stay on once the period is over. You know, obviously we would love you to and kind of be part of this long term, but that's totally up to you. At the moment, everything is open for you. All of our resources, the Burbicator Pro, you know, which I'll show you later how much that could have saved you a lot of pain in these market conditions. This isn't about selling you anything, ladies and gents. This is about making all of our resources available for you so you can see what hurt you. If it did, if you weren't hurt by this, if you got through it, then absolutely massive congratulations. It's been very difficult waters to navigate. However, I'm certainly someone that always sees myself as a student of these markets. And I think, you know, I think that's the way to look at life as well, right? So if you've got the opportunity to have those resources, to have access to those calls, the trading team, the courses, everything that you want, all you have to do is follow along with the post that is on CryptoBerb's Twitter. If you've got any issues accessing it at all, just reach out to us. We'll be more than happy to help. All right. So without further ado, because I'm already a little bit late, I will dive straight into the charts because we've got a few of you up there looking already. And there's also a new little section I want to bring to this, which is looking at a little bit of news. All right. So I just want to see and kind of discuss with you the key kind of topics that I've been kind of looking at this morning. What do I do on a Monday morning? I very rarely trade on a Monday. I wait for the range to develop. As an intraday trader, it's a really big thing for me, but I always want to have a tight macro view on this as well, not just in crypto, but what's going on with traditional markets as well. Anthony, Foreign Trades Crypto, Jesse, good morning, everyone. How are you doing? Also, a really big good morning to the rest of you who were maybe commenting while we were waiting to get access to the show, but really do appreciate your patience, everybody sticking around. You see the numbers really starting to fly up now. A very quick shout out as well. I will be on Crypto Town Hall later this afternoon with Scott Melker, you know, discussing, well, you know, the current market volatility as well as some other key things. But what I really want to kind of get everybody's focus on at the moment is this uncertainty in the market. So before we get into the technical side of things, I want to cover a few other areas as well. Anthony, we're absolutely going to dive into the technicals. You know, that's really my bread and butter. But I think one of the things that allowed us to stay ahead of this, or even if you don't call it being ahead of this, it's about damage limitation, is the fact that we run a professional trading team at the Bird Nest. Now, what does that look like? Well, it looks like it would do a fund or a proprietary fund, for example, right? Where we have a correlation of skills, knowledge, our skill base, that we're in a constant point of discussion without that of point of influence, okay? Meaning that, you know, I remember when I first came to the team and we would use elements like secret ballots, for example, at the end of each week, so that you don't kind of end up influencing people. Now, thankfully, when you build a team, you know, that you work together for a long time, then you really understand each other and you try and cover these from different angles. Now, there's a lot of mixed news in the market at the moment. So what I want to start with, before we kind of get into a few other little areas of actual news that's come out in the press today, is I want to look at what we've got coming ahead for the week. All right, this is in terms of high impact news. So we can see here, starting on Monday the 10th, nothing. Nice, quiet market. Now, it doesn't mean that the markets are going to be quiet, as we're going to look at in a moment when we see the overnight move. Again, at the moment, Wall Street aren't taking things with a lot of confidence. There's uncertainty in the market. As you know I sound like a broken record sometimes, but the markets just simply do not like uncertainty. All right, people don't. There's still a lack of understanding of how these tariffs get priced in. Trump. I'm trying not to make this show political, certainly not about how I feel about individuals, but just the effect that they're having, which is almost certainly deliberate, right? People will sit there and they will speak ill of Trump and stuff like that. And, I do not understand how he could be anyone's favorite human being, to be honest. But, he's not necessarily doing these things because he's a moron. It can seem like it, but there will be an underlying play card for this, right? And a lot of that is down to, rates being lower. Okay, the dollar dropping back, and people think, whoa, BC, what are you talking about? Why would he want a weaker dollar? Well, there's a lot smarter people than me out there that would explain it a lot better. But an overly strong dollar isn't a great thing for the US, all right? Especially when you combine it with a lot of tariffs. They need to look at inflation. They also need to look at their GDP, which they've revised down again. However, before we take a very brief look at that, let's look at the red folder news that we've got for the week with a focus on the US markets. Okay. Medhedo trufflation CPI at 1.39%. So we start here with job openings, all right, on Tuesday, come through into Wednesday, and we've got CPI, all right. So we've got CPI, core CPI month on month. We've got CPI month on month, CPI year on year, all right. Consumer price index. This is always followed up a couple of days later with PPI as well. We have unemployment claims. And then we finish off the week here on the US markets by looking at preliminary UOM consumer sentiment, all right? And the same with the preliminary UOM inflation expectations. Okay, now we've seen a drop in sentiment, all right? The markets are a little bit uncertain. Obviously, risk assets and beta risk assets like cryptocurrency have been getting smashed pretty hard. We've seen the pullback in the equity markets, and we're seeing the bond market get a little bit more appeal. Right. Now, there's a whole web and a world that goes in a lot deeper than this, looking at, for example, who owns that government debt and what the US are trying to do in terms of making those bonds more attractive for sale. What typically happens in, these kind of periods when you're fighting inflation is, you need people to buy those bonds. And if those bonds aren't getting bought up, excuse me, what then tends to happen is the central banks buy those bonds, which are then a loss leader for them. And then over time, as that kind of starts to play out, obviously what that whole thing is wrapped up in is this bubble of quantitative easing, all right? So that's what we need to look at. That's what China are going through at the moment when you look at the fiscal stimulus coming in over there. Obviously, the US have to worry about that debt as well. They're carrying well over 9 trillion in debt now. I think it was 1.1, 1.2 previously as well, just for the year. So it's all about servicing that debt over time. And in a brilliant kind of new book that Ray Dalio's just released, I've read, a fair bit of that, but also listened to him in a couple of interviews recently talking about, the debt death spiral, the heart attack, as he calls it, that's going to hit the country in a certain amount of years, where the debt just gets out of control. It paints a very, very uncertain picture in the markets. Now, why am I still rattling on about this? Because a lot of people reach out to me, they reach out to us at the Nest, and they're saying to people, okay, when can we start buying again, right? When does it make sense to start buying again? Or when could we potentially see an alt season? Or BTC's recovery, and, what's happened with the correlation with stocks, etc. The reason you're seeing so much uncertainty in these markets at the moment is because the markets themselves are pretty uncertain, and they're they're kind of undergoing pricing these elements in, but they also need policy as well to be in place. All right. So it's just a very, very kind of interesting, perfect storm of uncertainty at the moment. So how do we play that? Well, firstly, if you're like I am, you would focus, if you have the ability to do it, or you have the kind of breadth of experience in your team or yourself individually to move to intraday plays, then that's exactly what I would be looking to do. We've seen kind of a move to a risk-off sentiment across major markets at the moment, with more appeal coming into bonds. Obviously, we've seen very, very strong gold up until recently, but gold actually rallying with the dollar, all right, along with those equity markets, which again shows you that things are a little bit out of sequence. Those correlations don't exist 100%. Of course they don't, right? But when you're seeing so many different things, for example, you wake up on a day when, gold is plummeting, the DXY is plummeting, bond markets are down quite heavily, and you've got risk markets, your equity markets are falling pretty hard as well. Pretty hard to kind of gauge what's going on there. You're typically in a very news-driven market, and at the moment, obviously what Trump brings with him in spades is chaos, and that is kind of reeking across the markets. I have no doubt that what he has in his mind is overall for the benefit of himself and for the United States. It's just if that can be reached, and if it can be reached in a way that doesn't kind of drive America into a recession. Okay. So for those of you that survived that, thank you, congratulations. It's just my little kind of market excerpt on that at the moment. I think it's really important to have a feeling on that. Like I say, I'm not a macroeconomist, all right? I just try and kind of keep myself up to date with this. I know some very, very good people in the field who, I very much respect their opinion of, So one of the big things, just to finish on this, is the prospect of a US recession. It really is lurking. Consumer confidence is falling. Companies are facing, massive increase in trade complexity, for one thing, right? Dealing with the tariffs, how do you price those in? Making investors more nervous in terms of money coming in. You got to look at, the big banking and pharma stocks were down as well, leading those sectors to really start declining as well. Looking across the pond, or looking at the FTSE, for example, look at the FTSE 250 as well down. So it's interesting. Everything's kind of just being affected across the board. So what we want to do is we want to just look at the charts now and start saying to ourselves, okay, as investors, more than traders, I'm certainly not looking to open any major leverage positions at the moment, aside from intraday. But as traders, what do we look at, right? So for those of you that did stick with us, then we are going to move back to the charts now. So one of the key things we've got on here, this is obviously the Bitcoin chart. This is on a weekly scale. We've been looking at this kind of, this range here, or certainly this, impulse move higher. So we saw the low from down here to the high of this recent leg. For me, this kind of embodies it. Some people might have started from here. Others might have started from here, from the displacement leg. Look, for me, this made so much sense. The price was coming down. We've been talking about it for a long time now. As soon as we set into this consolidation, I remember having some amazing chats with the team over at the Birth Nest, especially with a good friend of mine and one of our trading team, Just Pit, about the idea of kind of losing this level, having this flush out before any kind of recovery. Now, if you're looking at this on the positive side, there's a lot to take from it. All right, I know it all seems a lot doom and gloom at the moment, but it's very healthy for markets to have these retracements, right? We got to remember we're looking at a very different dynamic across this market at the moment in terms of where the investment's coming from, where the money is coming from, ETFs, the dynamics of how money is invested into crypto, and it's how that then reflects, and how commercial or institutional investors, your funds and banks and bits and pieces, how they're looking to get this on the balance sheet. And I've been saying it for a long, long time. You can watch many, many old shows that getting this kind of priced in here past your risk manager compared to something down here, this is much more of a savvy investment. We had this large inefficiency moving up. If we're focusing now on the technical side of it, we had the 0.5 retracement here on the Fibonacci. We had the weekly gap down there. We've got the golden pocket a little bit below us. So you might be thinking, well, that's great, BC. That's kind of describing where we are. You got to remember that, we've been having this discussion since we took this high, and since we got this long rejection wick followed by this engulfing candle, and especially since we closed below, all right? So the week starting the 3rd of March, as we had it under here, to drop it all down. Nick, how are you doing, my friend? Jojo, wonderful to have you here. I hate it there. Is Adrian still bullish? No, Adrian hasn't been bullish for a while. I think something that, a lot of people kind of, I think look over with a lot of Adrian's posts is, first of all, you really need to be inside the bird nest to really get the kind of full breadth of his experience, right, and of his expertise. If you're following along on Twitter, what I would say is, and he's a brilliant shit poster as well, so pardon the language at this time of day, but he is, he loves a bit of fun. But his understanding of these markets is up there, and above and beyond a lot of central bankers and fund managers, all right? Not just kind of looking at this in terms of it being bullish or being bearish has a huge context question over it, and it also has a lot of nuance, right? So the fact of the matter is, you're kind of asking, okay, are you in a bull market? Are you in a bear market? And there's so many different ways that you can look at that. I think actually a lot of people aren't set on this. I've had talks with people from Goldman Sachs, from HSBC. I was up at an event last week with central bankers and hedge fund managers and that. And, the variance and differencing in opinion across the board there, the one thing that you can see fairly set is that there is this move at the moment a little bit more towards a risk-off sentiment. You might think, yeah, it's great because Bitcoin's already down here, right? But actually, it's not just, obviously, in the world of crypto, people get very kind of crypto-centric, but actually it's not about that here, right? This is about the broader market outlook. And what you're doing is basically with something like Bitcoin, if you put something like Bitcoin into a risk-off environment, then you can basically, it's like putting a fish into a pond that the water just simply isn't oxygenated enough for them to survive, right? You can be in the environment, but is the environment set up for you to be successful or to survive in? And I think that's the kind of broader market question that we're looking at, right? So, you're looking at this here on a weekly chart, right, like this, and Bitcoin really doesn't look that bad here, right? Yeah, this drop is a problem. I know we've had a lot of news related issues. Price could come all the way back to this consolidation, right? But again, it's what you're looking at this, and I think the thing is, people want answers that they're not necessarily getting, and this definitely isn't aimed at you, by the way. I hate it here. I think it's a very, very good question, and one that definitely I can't answer on behalf of Adrian, but to kind of discuss the thought process that goes into it, is the question, how is the question framed, right? Are you looking at this in terms of, okay, when can I start, just like blindly longing alts again, or start buying alts again and getting them in the portfolio? For me, I think that's a fair way off. I think when you're in market situations like this, I think you want to be looking at a flight to quality, right? That's typically what happens. So you're looking at, okay, even if we're looking at this microcosm of cryptocurrency, what is it that we're looking at here? And I think the answer is, if there are good projects, I've covered this over the last several weeks, like, for example, adding Bitcoin at these levels, I'm happy to. Adding Ethereum at these levels, I'm very happy to do. I've been actively and openly adding, Algorand. I'm also looking to position into good AI projects. Just because the market's turned like this, all of a sudden people are like, yeah, but you can't invest in AI projects with that because, the market's screwed. Everything's dead until 2026, 2027, 2028, blah, blah, blah. Yeah, that's fine. But I think when we kind of look, I think when you look at it from a more macro perspective, if you're buying, let's say this is any stock, but Bitcoin's a really great example of this, right? If I'm buying Bitcoin here, right, and then I still buy Bitcoin here, we continue to move lower. By the way, I'm not saying we're coming down to these levels. And I continue to buy here, then we start to see a bit of a recovery. So I'm like, okay, I'll add a little bit more here and add a little bit more here, etc. The whole point for me here is I'm looking to add this to a long-term portfolio. I'm not looking to buy it here, sell it here, buy it here again, sell it here, or buy it here, panic and sell it here, buy it again here, panic and sell it here, and then watch the market run away. And that, in truth, really is how the markets tend to work. It's about flushing out retail, and not just retail. People see retail as this kind of derogatory term, and it really isn't. But it's, the transfer of wealth, and typically the groups that control that do it incredibly well, and they have armaments that we just simply don't have. Trump, Elon Musk, people like that can come out and can move the entire markets with just a simple statement. All right, just a simple statement. Excuse me for a moment, just gonna have a sip of tea. Right, so whack, hello mate, good to see you there. I hate you there. I appreciate you too, my friend. Yeah, I always look to Adrian for guidance. He has such a deep, market knowledge of that, not just that legacy market knowledge as well. Always really, really kind of learning from him here. Medhedo, let's have a look. Troflation's recent data indicates a significant decline in the US consumer price index. Well, yeah, I mean, we're certainly going to see how that kind of flushes through this week, right? We're going to see the CPI numbers coming in, which, you know, is going to be really, really interesting on Wednesday when we get that come in. Obviously, we start with core CPI. For those of you that don't know, right, the difference in core CPI and CPI is the core CPI. It's the change in the price of goods that and services purchased by consumers, but doesn't include food and energy, right? So really two really big things at the moment to include in that, all right? Whereas CPI is the opposite, right? So that's, you know, that includes everything, that's services, so that includes your food and your energy as well. And what you're looking for, the number that they forecast, you actually want the number to be greater than that, to show that strength in the economy, to show the stability, but to also, you know, show that overall it's very, very good for the dollar. So you get a little bit more dollar strength and a little bit, you know, that in itself affects risk markets in different ways that we're not going to go into now, which also obviously we then factor in bond markets. But overall, it's going to be really, really, really interesting to see what we've got, the CPI print. Remember, that's coming in on Wednesday, and then PPI, right? Okay, which follows us through on Thursday. Now with PPI, you're looking at the price of finished goods, okay, and services as well. And again, your core excludes food and energy, where your regular PPI doesn't. So I think we've got a really big news week. Also, Thursday is going to be a really interesting day because we've got unemployment claims coming through as well. All right. So, you know, they missed the figure on that last time. So there are these kind of key volatile moments. Now, these are a little bit in a nutshell for us, all right, which I appreciate. So you need to take that with a pinch of salt. But how we're looking at this is basically, are we at a reasonable place to be buying decent assets? And for me, yeah, I mean, I just think, like I said, when we were here, right, you know, I was happy to buy down here below the 0.5. Very open about that. Now we're back down here again. What am I doing? Well, I still need to buy at key levels. For me as a technical trader, I still want to see the two things overlap one another. But ultimately, do I think that Bitcoin's value at this level is the big question that you should be asking? And I think in and around this area, I could look at myself and ask myself in, you know, a month, 2 months, a year, 2 years time, you know, was it a sensible move to buy at these levels? And I think it's okay. Now, moving across onto other assets, maybe not. You know, am I buying, you know, whatever? I don't want to say a specific coin, whatever, you know, ridiculous things are out there now, you know, fart cannon coin or, you know, donkey coin or whatever. No, the market conditions aren't there for that level of risk. You know, we saw the memes coming in, they took over. Whether they come back or not, we're not really going to know straight away. For me, I'm looking for quality products. All right. Burnside, thank you, my friend. Legend, right back at you. So, okay. Let's move away from this for a second. Let's really get into the technicals because we want to leave some time to look at some alts and that. So I know we started late, but you know, I just thought it's so very important to kind of share, and I want to share that kind of side of things more, how I'm looking at the markets, because I do think there's a lot of stuff that's kind of missing in the space very often. And Jojo as well, you know, a wonderful member of ours who's commenting in the chat at the moment, BTC rally in full season is what I got from a research report. Yeah, and I've had a lot actually to kind of back that up. As well. Also, you need to remember the tariffs, everything like that are going to take time to wash through. These things don't really happen overnight. Also, you know, this is part of a bigger ongoing plan that's unfolding, you know, under Trump at the moment in terms of, I think, bringing interest rates down, probably stabilizing, finding a middle ground when we sit there. So, yeah, I think it's an interesting one, right? It is an interesting one. Anyway, looking at this and speaking in an area where I'm much, you know, more proficient, or hopefully anyway for you lot listening, which is on the technical side, what do I want to see here from Bitcoin? So I'm really kind of looking, okay, where are we ready to react? Why was I, you know, quite a keen buyer down here? And I think actually if we go back, well, actually you can just go and find them on my excuse me, my Twitter profile. I do the Bitcoin report for the Bird Nest. We have one of our technical, one of our trading team do it every day of the week for members. And I always share a bit of that report on Twitter. Okay. And I do that every Sunday. So you can go and see my thoughts from yesterday, which I'll run through with you all as well when I add it to the chart. But most importantly, last week, as we kind of stepped in, you know, was looking here and saying, okay, remember we had this really big Sunday pump, right? This is where I wanted to be a buyer, right? This was the level I was interested in for a couple of reasons, because first of all, we're reacting at this weekly gap down here. We've filled a lot of these inefficiencies, all right, in this move. We're at this black line here is the 0.5 Fibonacci level. We come here as well. We've taken out a local low. I like to see that liquidity taken and price to start to recover. It's the only way, in my opinion, that you can really kind of start to see on here and say, okay, well, how's the market reacting? For example, what happened when we took out this low here? Yeah. So does this candle close here? Look like price really wants to recover. So, you've got a big body close here, right? But you've got a long downside wick showing some absorption. So I follow that over to the left and say, well, where's this really reacting from? If stop losses exist below old lows, above old highs, that's where we know there's a pre-made bundle of liquidity to tap into. Then why would price just react here? But it can do. It might do. Might just kind of taking this little micro low here, this consolidation before this big pump. So you can always make a narrative. But typically, I tend to look at how price is engaging with these key lows and highs, right? Because look at this strong close through, meaning when we retest this area, as the legend Dante would say, for example, when you're looking at these moves, this isn't his way, so don't quote me on it. Dante, don't call me a C word for saying it. But the last low pre-break, kind of very similar methodology, lows and highs, and saying, okay, when price kind of breaks below, you look at that area to be retested, and if you get those short setups off the back of that, then they're often very, very good places, very, very good places to be active, right? Now, if we move it back and we look at this low, when price dipped into a key level, remember, identifying a key level where we're expecting a reaction. All I'm saying is when price gets here, if I saw just a massive candle body, start to close and really gain ground at this week 0.5 Fibonacci level, it's not telling me that buyers are stepping in here. We're not seeing absorption, where ultimately we did here. We took out a low, we recovered and we closed above that low. Therefore, whether there's a relief rally, whether this is the start of a trend reversal, what I'm then immediately saying to myself is price is seeking liquidity higher. This is considered value at the moment in this time and space. So the buyers here are looking to sell those positions back to willing buyers who are happy to buy higher up, okay? And often this is retail buyers who see the recovery, they see, price coming in, they're like, oh my God, we're moving up, price is coming in, all of a sudden price is starting to do this, let's buy. And unfortunately what happens with that, it just simply creates the liquidity above these key levels, often within gaps. These gaps exist because of a lack of order pairing. Basically, selling pressure was so strong as price came back through, then you get these gaps. The market loves to rebalance these areas. Or we see them from highs and lows. So that's why I was happy to be a buyer in here. All right, again, short-term control positions, also adding to the investment portfolio down here. But as I look at price in here now, I still want to see those kind of reactions. And I'm just not really a big fan of this one. All right. So it means that I'm now looking here at this low. So why aren't I a big fan of this? Well, today if we close and we get back above this, then I might say to myself, all right, maybe we could look to kind of move a little bit higher through this move. If we look at what happened here on a weekly scale, we can see the big black line here, basically. We closed below that here, these up close candles, right? That's taken liquidity from the highs. Buyers should be stepping back in here. If we revisit this area, you basically take the flats of these highs. Price comes in, you're looking here at the down close candle to be the bullish order block, which we never closed above. So at worst, I would be looking at this lower candle here to offer some kind of support. Price wicked below it, wicked back above, but again, gaining territory in this area. I always use this analogy for my students, which is think of a hot pan, right? A hot frying pan. Now, if you accidentally, you leave a hot frying pan or somebody leaves a hot frying pan on the side, you go to pick it up, not really knowing, and it's baking hot, you would be able to touch that for a few seconds and you would have to drop it. You say a few choice words, but however you look at it, you would be bringing your hand off that as quickly as possible, right? Like bouncing a rubber ball off of a marble floor, right? You see this big, quick, aggressive, violent reaction, all right? However, if you throw a bit of putty at the floor, a bit of dough, in the mind because I was making pizza last night, right? Then what happens? You throw that at the floor, it just splats into the floor and it stays there, right? That's the kind of reaction you're looking at. So, when price kind of comes into here, what happens? We see up here, you get the bouncing ball effect, but down, yeah? this red line, what happened? Price kind of comes up into this red line and goes, no, thank you, and then shoots off in the other direction. Yes, you need hindsight to see that at that level, but our first indication of it was this long upside wick here that failed to gain any territory above here. We then set a bearish engulfing candle. All of a sudden, you're starting to gain territory back down here in this bullish order block. As price grinds into here, you either wait for further confirmation, setting the bearish order block, which are these two up close candles. For me, this is how I look at the market, how I've studied it over the years. Price closing below that here. And, you know, a lot of people said that I was a bit mad for thinking this after we had this long downside wick. And I did admit the long downside wick is very bullish coming into this low level, this huge move back higher. You know, we had a lot of news catalysts in that week as well. But ultimately, we lost this level, right? So whether you step in overall bearish, I have to, because of my system, I'm still expecting price to push lower as we did last week. We were favoring short positions. We did so on our live trading shows as well, unless we were obviously intraday scalping back up to levels we were then looking to short lower. All of that makes sense. So if we decant that onto a daily scale here, excuse me, then what do we need to see? Well, if we look at how we're delivering at the moment, you know, we just need to draw this across here. And we can see that we've got a daily order block, right? Now, this became valid when price closed below it here. Now, typically what we look for is price to then run out the next local liquidity, and then you're looking to study how price reacts here on the lower time frames. All right. So for me, what I'm looking at here, I'm saying, okay, is this kind of reaction I wanted to see? Well, you know, if we compare these reactions here, price came into this low, nice long candle, closed back in the range of this, gives us an expectation that price is moving higher. This one looks heavy, right? We think of the bouncing ball versus, you know, the dough ball, or, you know, you think of it as a dumpling or whatever, all right? Then this looks more like a dumpling to me than it does a bouncing ball at the moment. Now, I could be completely wrong. However, all I want to do now is highlight these key levels that I'm interested in being a participant. And here is one of them. This is the swing low here that was created when that candle closed. Strong body close and just moved through this, all right? So closing below. I now want to see how price reacts when we get to this level. Okay, so if we get to this level here and we get some low time frame setups, then I'm happy to short it at least to here. Why? Because I think that's really the key resting liquidity that's under here on the higher time frame. Okay, and ultimately, if price is still showing weakness here, we can't react to this weekly gap. The 50% Fibonacci retracement wasn't enough. Then we're probably heading down here to the golden pocket. All right. Funny FOMO, hello mate, love the name. NBA Young Believe, how are you doing? Good day, legend to you too as well, my friend. By the way, I have not in any way forgotten, spoke to the technical team. If you are still having any issues gaining access, mate, to the Discord, please do just drop me a message later and we'll make sure that we get you in. So, plan. Really, really, really simple. I'm a simple creature. I like simple plans, right? I haven't seen the reaction that I really like at this level at the moment. I think it means we could be going lower. Now, does it mean that I just want to short this blindly? Absolutely not. Yeah. What I want to do is, you know, if I'm looking to trade this higher up to here, then I want to look at these levels across from here. Very, very kind of you, Juliet, but I'm pretty sure people would probably be on your channel if you wanted to know how to trade stocks. But thank you for your input. Very, very kind. So as we look at this here, where are we? What's going on? Well, I'm going to look at potential shorts from here. I'm also going to look at potential shorts on this order block here. If we start seeing strong moves up into these areas, then ultimately, only then I'll consider that we're moving for the liquidity resting above these highs. Okay. Looking at it on a 4-hour scale, again, I would be following you know, the daily plan there, just for those reasons. I'd need to see something really concrete here, and we just don't have it, all right? Because we've got a gap in here, we've got a gap in here, so I'd still need to see price recovering above both of those. So as we move back to our daily level, right, the daily gives us our clearest plan, all right? So let's take a look at Ethereum as well, right? What have we been looking at over here? What is all of this noise on the chart, which, you know, typically I hate, but do just want to make sure that, you know, we're understanding this. So the kind of bluey grey box here is a kind of key pivot point for me that I'm looking at. Yes, it's a large area. I'm obviously looking for setups and confirmations within it, but quite simply, we've seen key resistance here, strong move through it, support, 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 leading to long moves here. We lose the area, resistance, 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 back above it, support here, support all the way through here. As we can see from all the way up here, the key targets have been met now. We were looking for these lows to get swept out. This is the consolidation that led to that move higher. So this has ultimately here and here provided a really kind of good buy zone. Now what we've seen is price close quite aggressively through this level, gaining a little bit of support in this area here, but like we said, that's just not really enough. Looking at this now on a daily scale, let me just clean this up. We saw the sweep of this low, which was a nice reaction. Now, what we wanted to see in here is continuation by price getting back above this down close candle here, or price setting new down close candles like these and getting back above here. Unfortunately, we didn't see that. Instead, what we got was the opposite. Order block set, up close candles, price close below. That means I'm then very interested in this area here, because this is the area for me where the buyers stepped in and they're now going to be offside. So as we close below here, moves back to this area, give those market participants, the people buying here, the option to mitigate, the option to close their positions out. And then they also have the opportunity to get back aligned with where they believe the market's now heading and then move short. All right. So again, key target has been reached down here, so we need to be patient at the moment. We also want to wait for Monday's range to develop. But remember, nice, clean, clear plan. All right, we're reacting at an area where we've historically seen key support. We just want to see that daily confirmation within this area in order to give us confidence the price is really ready to move higher here. Until then, we're looking for lower liquidity targets. And ultimately, as we kind of zoom out, and you have to really kind of zoom out and move back here, is a lot of untapped liquidity resting in these areas. So very, very hard to kind of get that gauge. However, on a weekly scale, if we lose this area here, the kind of grey blue box, then I think we could be looking lower. At the moment, I think we could be in for some chop here. All right, there's no doubt that you kind of, for the first time, we've closed below this green box here. I leave it on here just as a point of reference. All right. But that's where we just want to make sure that we're being a little bit considerate here. Ultimately, if I want to get long here, the first thing that I want to see is price closing above this. All right, which is our daily order block. Down close candle, price closes above here. We look for retests of this area. Again, find the late shorters, people that are caught offside. Price comes back, gives them a chance to close those positions out, and then you can get momentum moving to the upside of the market. So I think that's really, really clear plan there for Ethereum. Now, a couple of other bits that I just want to take a look at. Let me just see if we've got anything else in here. NBA Younglead, will Trump save the market one more time again? LOL. Yeah, exactly. I suppose one person's savior is another villain, another's villain. Sorry, it's always an interesting dynamic to look at. So I want to just take a look at a couple of alts with you quickly, but I do also want to run you through where we are in terms of our risk outlook. It's hard to call it a macro risk outlook, right? But I always want to look at these, and what I want to see is some kind of correlation in here. And I'm going to tell you between what? Well, I'm looking at the US 2s and the US 10s. All right, these are the yields. So these are the bonds, right? This was a key level we wanted to see hold. Then looking down, I don't know why that's off the chart at the moment. Anyway, it doesn't really matter, but this is the next level that we were looking at, all right, for price is through here. Probably just hidden it on one of the menus. But we've had this reaction again here. Now, ultimately, the bond markets at the moment are going to be an attractive proposition as we're in a risk-off sell-off. So, people that were getting these bonds up here, as we were pushing up towards 5% almost return on the US 10 years and on the US 2s, right? This is a lot more interesting kind of from a technical perspective. Not that I'm using it in that way necessarily. I'm not actually a buyer of bonds, but who is are major investment vehicles, banks, etc., and the government. You're buying government debt. So how are you getting rewarded for that at the moment? Well, the US 2 years, you're seeing that down at 3.9% or 3.937 to be exact, when not too long ago, you look back here, 13th of January, this thing was kind of peaking out at the highs at 4.381. All right. So, almost a percentage higher. That means you're getting a whole percent more for buying that debt. So why do we look at those? Well, I tend to look at those and then also look at the dollar index here as well, which we can now see is in the process of losing our range low, which is interesting, actually. I mean, the fall on this, a lot of people are talking about, the idea that this is Trump's points. with the tariffs, that some of those tariffs are so ridiculous considering, the US is reliant, I believe, and you can correct me on this if you're from the US, but I believe it's the Midwest that are very reliant on, Canadian oil. You get a lot of fresh produce from Mexico, for example, as well. And I believe Canada, provide a lot of power to 3 major states in the US as well. So a lot of people are saying that Trump's coming out and he's just being this, this big kind of excessive kind of, I don't want to use the term idiot or, I don't know, like a bit of a power hungry kind of character, right? But a lot of these things will be by design, whether you agree with them or not. So the dollar clearly cooling off here. Now, what we normally see if the bond markets aren't that much of an attractive proposition, and we then see a weak dollar as well, we expect there to be some kind of counter correlation here with equity markets, right? And that we're seeing strength in the equity markets. And that's obviously just not... I'll read that in a minute and see. But yeah, so we're looking at this. Let me just, sorry, I've got all the markups on that. We look at the NQ1 contract here. This is the NASDAQ contract, right? So we're seeing this really... strong down move here as well. So there's just no real correlation between these markets at the moment. And that's a little bit of a concern for me. The S&P 500, obviously the same. Look, I'm, trade the mini contracts on these, right? So we can see we've lost kind of like a key SR level here. As well on the S&P 500, the whole market just kind of reeks of uncertainty. Even gold, which has just been on this unbelievable tear. So, obviously Peter Schiff will be absolutely delighted. But, look, I'm not seeing a correlation between you. I'm not saying, look, that this is always the case, but typically if you're looking at something like dollar index, and let's just pop this on here, and then you say take the price of Bitcoin. Yeah, let's just... Should have maybe done it on a new DXY chart, shouldn't I? So you don't have to deal with the range. Let's see if there's... We can turn that off. Here we go. And I think we can hide the rest of that. Beautiful, right? So, what you're looking for here is in periods of correlation. So, a strong dollar here being, bad for the price of Bitcoin as Bitcoin sells off here, where as we see the dollar moving down, the dollar index moving down, right? The dollar index is a basket of currencies weighted against the dollar, which is heavier weighted towards the euro. Then you start to see price increase. All right. Now, obviously, what we've seen here is, a correlation, right? You've seen price coming down heavily, of course, on Bitcoin as the DXY sells off, but as major stocks sell off as well. And the reason that we like to look at that aligned with the NASDAQ or with the S&P 500, for example, is we're looking for this to be a tighter correlation. You can see that here, right? If I move this to a line chart as well, you can see, yeah, of course, there's moments where they kind of slip in and out, but ultimately large sections of this price of Bitcoin is moving down along with the S&P 500. It'll be the same with the NASDAQ. Why is that? Well, these are proxies for kind of risk assets and traditional marks. In traditional markets, they're the indexes for that. They're full of technology stocks, AI, etc. So that's what we're looking at on that front. So with that, when there's not really a clear read, what we're asking ourselves here is, okay, well, how do we position ourselves? And that's when you kind of see this move with price going a little bit defensive. So just as we kind of decant and we look through that, the key for me then is looking at this and actually Resume, and I covered this on a live show a few weeks ago. And let's just say, for example, we want to look at a random ticker. Let's look at Sol, right? So as the plan was here for Sol, hasn't really changed, right? Now, the squiggles have all kind of been overtaken by a lot of this. So let's just clear this up just for a minute. We'll leave that on there because that's relevant to the lower time frames. But again, as we've been looking at on these other assets, what have we got? Price, we were looking for this area to hold. Why? Because for me, this was a good area. It was this consolidation that led to this massive pump. Great reaction here, brilliant reaction here, strong reaction here. And then look at the difference when price starts. Remember what I said to you about the bouncing ball or the hot pan analogy. How can you hold on to that pan there? If it was so hot, your hand had to quickly move away from it here or quickly move away from it, or the ground was firm and the ball was bouncy and you got that strong reaction. Why is it kind of just grinding into it here, and ultimately we then saw that sell-off. So a big move to the upside here, that big news catalyst. But what did we say? Well, we said if we gain ground in this area, we need to see some structure shifts. That's why the red line is here, all right? That's why the order block line is here, right? We closed above that here, looking for potential long sell-offs. We lost it straight away. Gave us an indication then, even if we were wrong on those initial bids, that the market's heading lower. And where's the market heading to? Our key level down here, which was just this swing low. We're now at this point of support and resistance. We've taken out the majority of the liquidity targets down to here. We do still have some moving lower. So for me, you know, here I still think Sol is a decent bid. I want to see, you know, some lower time frame structure start to build to get into here. I've loaded up already on Sol. I loaded up again here quite aggressively, and I had added some more when we got back up to here as well, and I'll continue to add this lower as long as my belief fits that I think Solana will be around in the future, right? Because I'm happy to hold this asset for several years. You know, I'm going to shed this off the balance sheet if we start testing the 50-60 region or lower. Ultimately, at that point, that's either a really, really good buy, or you've got to convince yourself, or at least understand why that's maybe not the best. All right. Unfortunately, guys, I've just lost the comments. Really having a few technical issues on here as well. I think NBA Young Believe you just made a good point. Anthony made a point that just made me laugh about the DXY. But really, at the moment, guys, the kind of point that I'm trying to make is whatever assets you're looking at, it's about highlighting these kind of key areas that you want to be a buyer or you want to be a seller, like Algo, for example. Right, this was a really key area here for me with Algorand, right? It's a very, very messy chart, very, very kind of difficult to kind of pinpoint these. But ultimately, look, this area here, right, was a really, really large catalyst for a huge move up. So I'm very interested to see what happens when price comes back. Now, look again, price starts kind of holding here. You start to kind of close a couple of candles into here. So you're saying, okay, you want to see how you react at the swing low. If you get a good reaction at the swing lows, right, like we had here, just do that slightly larger so it stands out. Price comes into our area of interest. Yes, we're closing candles in there, but when we take liquidity, we're also reacting at this gap. How does price react? It recovers this level very quickly, starts to move higher. So as I look over here, did we see that same kind of reaction with price in here? We absolutely did not, yeah? This level, in fact, as we saw it when we lost it here, we got that immediate beautiful retest here with this pin bar candle, which created the sell-off. Price revisited this level again. Remember, this is an area we're looking at as key support. If it's not support and we believe this has been lost, this move here is one of two things, right? Under here, it's either a deviation. If it's a deviation, then we expect price to recover this level and move higher, all right? I will forever think of SC's voice when I hear deviation. No one says it better, all right? Deviation of this level here, and we move up. If we don't do that, then simply we're still continuing to look down. Same here, all right? Now, the big question for me is whether this here was actually just a really large deviation in the move when we kind of stepped up here, in which case, then we need to make sure that we're, you know, that we're kind of holding this level, and at the minute we're not really showing it the respect that we would like to see. So I want to see price back above this level here, but ultimately I want to start seeing some structural changes as well. And one of the things that I like the most, again, this is going to depend on your time horizon. This is a bearish weekly gap, all right? I want to see price back above this using this area as support, and then I think we can really start to fly here on Algo. In terms of adding more Algorand, I said this last week and the week before as well, then, you know, I'm pretty heavily loaded on this at the moment, but I'm definitely happy to be a buyer probably around, you know, I'm always looking for where these key kind of moves are. There's not been major catalysts from here, really kind of down here, right? You know, anywhere in and around this level. This is the biggest, most recent move we've seen down within this consolidation. If Algo started pushing into these prices, a lot of people would be saying it's dead. But for me, I'm more than happy to take the risk on that bid. Why? Because if you're doing that consistently across the board, right? Just really zoom out here. And let's just say you're finding good quality projects, not these kind of like flash in a pan, pump and dump nonsense, but let's say you're buying this here. Let's say you do that with 10, 12 different assets, right? And you're just right on one of them. You know, 2,359% back to its all-time high. For me, good team, quality product, huge integration across the market. So why would we look to add that to the balance sheet? To the portfolio? Well, quite simply, because it's just a decent bet there. If it goes to zero, it goes to zero, right? I think it's unlikely, but if it does, then that's fine. That's why also you never invest more than you're willing to lose. And that's why it's all about having a balanced portfolio. You can offset this, by some bond investments, or looking to, if you're not in those kind of traditional markets, looking to gain some yield from some very good and trusted yield farming methodology, for which, again, if you're interested in that, make sure you come and grab all the information we've got on that from the team that do that exceptionally successfully. I think the trading tank was probably one of the biggest beneficiaries, across the market in terms of airdrops and the work that he did with Hyperliquid and stuff like that as well. So, that can be a way that you can look to hedge those riskier bets, all right, as you move through. Gert, not a stupid question at all, mate. Sorry, my fault for not explaining it clearly. OB is an abbreviation of order block for me. So OBD is just showing me that we're looking at an order block, but on a daily chart. Okay, so for example, when I'm looking in here, I'm saying to myself, all right, what do I want to see in terms of recovery here? Well, I either need to see singular, if there is a singular one, for example, or consecutive down close candles. In this case, I allow for the body. That's just the way that I do it. Because we're here on a daily chart, I would have OBD. Now, price comes and closes back above this, especially this one being an order block that's taken liquidity. I would see this as an area I want to see as support. And then, on the lower time frames, what I'd look for is that close above here. I'd look for liquidity to be created in the form of like being able to have some kind of sweep, a recovery of that, okay, and then for price to move high. Again, I look for those kind of patterns, those type of fractal recovery patterns, but on lower time frames, all right? In this instance, for example, as we look, then we can see we had this up close candle here. Price closed below it here, telling me that this area wasn't really, this area here is seen very much as resistance. This is where buyers stepped in. This is where the position was confirmed lost. So any pullback towards this area gives them the opportunity to mitigate. But, ultimately the key thing I'm looking for here is the liquidity that we have resting lower, okay? And then how price reacts at that lower liquidity. So all of this here, obviously I'll correct that massively wonky line, right? Great liquidity pool. So then I'm kind of zooming out, looking left and saying, okay, where else could price be reacting from? And actually, I really like this low. It's a questionable close. Why do I like this low and not some of the others? Because this is a low that's within a gap. It's a gap low, right? Meaning the price has taken, it's rebalanced, this buyer stepped in here and it moved away. So as we look across the board here, I'm looking and saying, okay, well, where are we at the moment? Well, if price comes back and closes back above this level, then maybe we kind of get some relief. We never really retested this daily bearish order block here. Okay, and we're still a fair way away from confirming that one. So that's the one that I'd need to see price come back and close above, all right? So one more, where was it that I just wanted to take a look at with you all, because it was up a lot this morning. Was it Arve? That's it. Because somebody asked me regarding Arve, right? So let's just get a clean chart up here. Right, just again, just simple kind of pivot point here, price holding support and resistance levels. But all I wanted to show you is this idea we were discussing, right? And again, this kind of came out from the Razoon and my live show that we did a couple of weeks ago for members, right, which we run every Thursday. I do live trading Tuesday, Wednesday, and then we've started to do a joint live show on a Thursday. And it's really handy because people are saying to us, okay, well, when you're just kind of cascading, why are you buying in the certain places that you're buying? And sometimes it can be a lot simpler than it seems, right? And people have really, really good methodology for this. This is just sharing with you my kind of thought process on this. So either on a weekly or a daily chart, however you're looking at it, what I'm looking for is I'm looking for these big, aggressive expansions, right? And now Razoon and I were, looking for the origin of that, yeah? So yes, this is where the up move started, right? But it's this nice kind of staircase pattern. It's very balanced. For me, the reason that I was really interested in Arve here is because this is the down close candle here. This is the consolidation that led to this massive rip higher, okay? So if we highlight this area here, I'm just going to draw this across. Do this in blue. It's also an order block, right? Down close candle, closed above. Price now retesting into this area for the first time. Also going to move this onto a daily, and then you can see here again, the consolidation reacting out of this beautiful bullish gap here. Price came back down into the order block, displacement away, set this gap. This is where you got the order pairing. Price really kind of moved away. Now we're back in this area. So for me, the only thing I'd really like to see Aave do is kind of take out this low. Really like to see, you know, some liquidity taken to kind of say, okay, you know, buyers have kind of stepped in here. The only other thing that I'm watching out for here on a daily, if we don't take that liquidity, because it can be a sign of strength. This is currently a bearish gap here on Aave. If we get a daily close above this, I think we could look for some relief moving into these highs here, until we get to these inefficiencies up here, whether that's short term or longer term. Ultimately, you know, I'm happy to add Aave to the portfolio down here, all right? But looking at this more for building swing positions, or what I would want for confirmation of intraday trade bias, is I want to see price above this gap, excuse me, making that an inversion gap, which means we would see it as purple, and then price really kind of looking to move away. All right, legends. So okay, do you know what? I'm just about to leave then, but I'll take this one request, and then the rest of the requests will have to wait until Alt Request Wednesday. Going to be back with you at 1:15 UTC. No, sorry, I'm not. What am I talking about? That's the live trading show. I'll be with you at 12 UTC, so 1200 UTC midday on Wednesday, when we'll have our Alt Request Wednesday. But I will just take a look at this for you, Anthony, before we go. Let's have a look at this. So this is Res, just applying the same kind of principles here. Now, obviously, we don't have the data here, and maybe, you know, I'm on a kind of, you know, maybe there's charts that have other data, but ultimately, if we're kind of bottoming out, or we look like we are on one of these charts, again, the first thing that I look for here, even on a weekly, daily scale, whatever, is a gap inversion. Now, we haven't inverted this gap yet, meaning that it is still bearish, and there is this kind of slither of a gap above this here as well, both of which are kind of currently containing price. All right, so I'm probably going to move to a daily here and then just kind of try and take this out on a more granular level. All right, I'm going to take them off so that I know in my mind on a weekly scale we still haven't faced that recovery yet. But what I do like about this is the structural recovery that we've seen here on a daily scale, meaning that obviously we've gone from setting lower lows and lower highs to get into this move here, where we've now seen higher highs and higher lows, meaning that we want this area here to hold to see price move higher. Now, what I do to kind of look at that is when we have these, you know, shifts in structure or these breaks in structure, this is where I look for these order blocks to come in. All right, so I'm looking for the down close candles here. This was high probability for me because we've taken liquidity from the lows, then we've expanded higher, and we've also gapped higher as well, showing me there's that impetus in price action as it's moved. So now as I look at this here, I'm saying, well, if I want to get involved in this in one way or the other, I'll favor the higher point of this. Then there's this area here. I could look to be a buyer on a retest as long as I get that on there. Hey, Pip, my brother, how are you doing? Or I want to see price close above this, right? And look for these kind of confirmation plays. I don't really have any kind of gaps within here. If I'm looking to kind of gain a bias on a more intraday basis about where I think this is heading from here, right? Then again, I'm looking for the sweeps of these lows. I'm looking, in this case, because we're bullish on the daily, I'm looking for these bullish gaps to hold as well, right? And push price higher. But for now, really, I would be kind of focused on the daily here and saying to myself, okay, let's get a close above here if we want to continue this resurgence. Obviously, on the flip side of that, if we start closing, you know, if we're looking for the down close candles to be closed above, we close this candle as a bullish candle, then closes below the body of that level here, what gives us that indication we're heading lower. Now, remember, we haven't retested this order block area here on Res yet, so it could be the case that patience is rewarding if you're waiting for plays to come into here and then wait for those recoveries, right? Either that, or if you really start closing into these areas, especially if we start violating these gaps, then I think, unfortunately, it probably means a lot lower here for Res. All right, guys, so do trade safe. Please stay aware of the news that we've got this week. There's a lot of major catalysts hitting the market, including US CPI and PPI. We've also got unemployment claims as well. So we see a lot of volatility potentially coming into the market this week. Look at those kind of origins on here. I know difficult here with something like Res, but again, you know, find the areas that you see these larger moves, even something like this, right? So this is the consolidation, the down move before price really kind of had that expansion. So if you take these across, yeah, if you're expecting bullish reactions here and you start to lose these levels, look at these areas that you can just, it tells you, it gives you an indication of what it's going to do, right? The buyers were so keen to step in here before, right? Then when price gets back to this level, look how it just kind of sticks. Imagine somebody was selling Ferraris off at a tenner, yeah, or $20, whatever, right? Then you would imagine that as soon as you visited that, any Ferraris are left are going to leave the damn garage, right? If you're grabbing a pan that's too hot, you're going to get your hand off of it very quickly. If this is an area you expect something to bounce, you expect to see a bounce. Nothing wrong with consolidation, right? But just monitor these areas, be very, very patient. And then when you see the market show its hand, this here is going to be one of two things, right? This is going to be a type of power of three where you see consolidation, manipulation, and then expansion. Yeah. And if you're not getting that, what you're then looking for is you're saying, okay, well, to play this deviation here, you either want to be in at the lows, in which case you can mitigate here. But even if you're late to that and you're saying, no, I'm pretty sure that's going to happen, well, quite simply, when you then look at the move that's happened underneath this area of mitigation, right, that move down into here, what did we say? Look at the up close candles. Look at where those buyers stepped in that are now offside, and then where they get, to change their minds, basically, all right, and get back on side, in this case with the sell. All right, legends, look, have a fantastic week ahead. Apologies if I didn't get around to any of your questions and bits and pieces, and apologies again, we were late for the show, slight technical issues, which I believe are being worked on at the moment. Wishing you all a fantastic day ahead, and for those of you that are with us over at the Bird Nest, I'll see you around the Nest for the rest of the afternoon, and please don't forget, if you do want to come and join us, there are still some spaces available. Just get yourself over to Crypto Bird's profile. You can see the details for that on the screen at the moment. Remember, that's the one and only crypto_BIRB. Yeah, B for Bird's Nest. All right, get yourself on there. If you're unsure if it's him or not, he'll never contact you directly. None of us will. And if you want to check if it's definitely on the right profile, he's the dude with over 700,000 followers. All right. Have a fantastic week ahead, everyone. Be safe. And I look forward to seeing you all around the nest.